Bronson, thank you so much for being here. I think this is a second quote unquote new year that you come on the podcast. You've been here a few other times, but recently, I mean, in the beginning of the year, this is the second time. So I'm so happy to have you check in with you in 2026. Why don't you tell us a little bit about you?
Yeah, awesome. Well, great to see you, Steph. Obviously, it's been great being your friend over many years, actually, and just really, we've done everything from running conferences together to all kinds of different things. So I'm grateful to for you and your friendship and your impact in the world. Yeah, so I basically was a well-paid medical sales professional for years. I made good money, was making over 200,000 a year, but didn't like the that I had to be somewhere for a job at a certain time. Wasn't able to travel as much, and I worked with a couple of physicians that made over a couple $1 million a year each, and yet they were working 60, 80 hours a week every week, and I just thought that doesn't feel like freedom, right? So I started to learn about more about real estate, started doing single family, and then I had a mentor come around and say, hey, why don't you do apartments? And I was like, well, I don't have the money. And he said, you can raise the money. So I learned about raising capital. Now, fast forward, I quit my corporate job about 4 years ago. We've raised about almost 60 million for different projects and done, a variety of stuff in multifamily real estate. We're doing a lot of stuff now in oil and gas and debt funds and buying businesses. And so some development things as well. So we're doing a lot of different things, but I just really love helping investors to, find the best option for them. Because a lot of times as an investor, you don't have to be committed to one asset. You know, be like, I do multifamily all the time. I was like, multifamily could be great, but today multifamily is tougher, right? So maybe there's other assets that could work really well. So we like kind of looking into things that provide cash flow and tax benefits for people.
That's great. A great amount of asset classes as well. How do you decide what to invest in next, and what are you working on right now?
Yeah, well, I think the biggest thing I've had over 2,500 one-on-one phone calls with high net worth investors, and I run an investor community where we have called the Wealth Forum, and so I have a lot of conversations with wealthy people. And a lot of times, this call when I get people on the phone, I was kind of, well, what are your goals and what are you looking to try to accomplish? And most investors really don't know. Though I'm like, do you want cash
Mm.
flow? Do you want tax benefits? Do you want appreciation? And they'll kind of be like, yes, I want all of them. It's like, yes, okay, I want all of them too. But like, what's most important? And the challenge for a lot of us is like, we don't really know what we want. And so for investors, it's really important to get clear on what you want. And in my book, Fire Yourself, behind me here, became an Amazon bestseller. We talk about this of cash flow. Cash flow is really, I think, the most important thing because a lot of money someday is great, but it doesn't help you pay bills today. It doesn't help you leave a job. It doesn't help you to cover expenses. But cash flow will. If you can increase your cash flow by a few $1,000s every year, just per month, how much you're making every single year. I mean, that's huge, right? You can basically get to where work is optional, and so I think it comes from that standpoint. A lot of people today are like, yeah, real estate used to produce cash flow. It's very hard to find cash flow now. So, what are the assets that are producing cash flow? And so, when we look at that, when I actually identify, okay, my goal actually is cash flow. There's a few things that do it today. We actually like real estate debt funds. For a while, I didn't really understand this. Even as an operator, I didn't really get, okay, well, what's the big deal about debt funds? How do debt funds work? We can get into that. But basically, we have a partner, or there are debt funds out here that provide cash flow typically on a monthly basis. And these days, we're seeing stuff paying, 10, 15%, kind of annual returns paid out monthly, right? So this is something that's typically a lower risk position. So we like first position or senior debt. That means there's no other, creditors below that. It's just, hey, this is what it is. If it's low leverage, it's even better. 50, 60% loan to value. That makes it a very, very safe real estate backed asset that you're basically becoming the bank, or maybe it's a pool of loans to, you're basically providing lending for people buying properties. And so we like that. We like oil and gas for the cash flow benefits. We also actually, one thing we love talking about is private businesses. There's they say it's 10,000 boomers are turning 65 every single day. And a lot of people have businesses, and most of these businesses, people don't know how to sell them. They don't want to get rid of them. Nobody wants the kids don't want to take over the business, and they're not huge businesses. You can't really sell them to some big private equity, but they produce 500K or $1 million per year in profit, and that's a pretty good business, right? So we like buying businesses because they sell for sometimes 3 times profit, which is crazy. Like if you converted a cap rate, from
Yeah.
a multifamily be a 5 or 6 cap, this would be like a 30 cap or 35
Right.
cap. So it's incredible cash flow. So those are a few things we like in the cash flow department there.
Yeah, no, cash flow is definitely important, and sometimes it comes at a cost, obviously, right? So the return may be less than, let's say, a ground up development where you have to wait to get a return later. but it's a little bigger return. So I think is really what the goals are, right? So some younger people may prefer they're fine waiting, and some older people that are about to retire, they just want the cash.
Hmm.
Like you said, it's really depending on what people's goals are, and it seems like you have to guide a lot of investors on, okay, what are your goals? You can't have it all.
Yeah.
Just like in a
Yeah.
mate, apparently you can't have it all.
Hopefully, yeah,
So
no, but you gotta, yeah, it's really true. I think even with dating, you gotta find out what's important, right? There's certain
yeah.
things that are like, these are the most important things. And again, there's so much shiny object syndrome in investing and probably in dating as well. Like I feel like
A lot
there's
of
always
shiny
so many better,
objects.
right? There's a lot of shiny objects, right? Yeah. So I think it's good to get clear on what you want, what your goals are, and just keep coming back to them because often we'll get presented all these deals and we have to really run it through the filter of, hey, okay, this is a deal that does whatever it does, but let me go back to what my goals are and say, does this actually get me closer to what I want? And if the answer is
Hmm.
no, it may be a great deal, but it may just not be for you. And that's okay. We say no to at least 95%, 98% of what we see. And that's pretty normal. Like you should be saying no to
Oh yeah,
almost everything. And so that you can do the right deals.
absolutely. And as far as baby boomers retiring, obviously they also own real estate, and a lot of their kids don't want to do or manage the real estate. So there are also a lot of opportunities on buying not at 30% cash on cash or cap rates. But yeah, the opportunities are there, and I see a lot of deals coming up from people that are retiring as well. Just
Yeah.
wanted to comment on that.
Absolutely. Yeah, it's and there's always opportunities. Every market presents different opportunities. It's just you got to be willing to look sometimes other places. And I
Mm-hmm.
don't love real estate. We think I've talked about this. I don't love real estate. I love what real estate does for me. I love what
Mm,
investing does for me. Right? If it gets me where I want to go, there could be other assets to get me there faster. So that could be
sure,
better for me.
sure. And you were briefly mentioning you have a some development coming up in where, Palisades or where the fires were in California.
Yeah, yeah. So yeah, a little bit of story there. The fires happened, I think it was January 6th of 2025. I live in Pasadena. And so I kind of live in North Pasadena. The fires mostly hit Altadena, which is just a town up near the foothills here, and then also the Palisades, which is near the water. So the difference between the Palisades and Altadena homes are typically 1 million to 1.5 million. In the
Mm,
Palisades, these are like $3 to $5 million homes, pretty commonly. So where I live, it's much more workforce housing. And of course, across the country, that sounds outrageous, 1.5 million, but that's just kind of LA what it is. And so I started to really brainstorm and say, and again, thank God my house was okay. Evacuated for a few days. There was a lot of smoke, came back, had a bunch of friends that lost homes, and just got me
oof,
thinking, man, what can I do to help? Like, this is such a big issue. And so I actually went down a big rabbit trail and just wondered what are some things that are out there. And I've learned that you actually can build a house in a factory. They build these in 7 days. They're considered prefabricated or manufactured homes, and this is a long way from the metal boxes that people think of when they think of like, oh yeah, you build a mobile home or something. This is like, I mean, it's 2x6 construction. It's R21 insulation. It has the same roof you get, the same windows. Everything is like it actually appraises for normal value when you're done. And these are not tiny homes. These are not ADUs. These are basically two,
mm,
3,000 square foot homes. They build them in two, three pieces. They put them on trucks and they bring them in. They build them in 7 days and install them in one day. And they appraise for about retail value, which is amazing because they're about
wow.
50% of the cost of building a regular stick built house. And so I started to say, wow, that looks really interesting. So we're in the process now. We got approved to do a fund. We're a little bit early. We're recording this in February of 26, and we're a little bit early of actually no. There's no new sales comps there. We're going to do it with investors and go build, but we just don't see. We're basically appraising against other older properties rather than new ones. So we don't want to be early because if we're early, we're not going to be able to do more rounds. And so my plan now is to build one as a kind of owner builder one to do private tours there and be able to have people walk through and see the 9 foot
Mm,
ceilings and quartz tops and the tile backsplashes and see they can actually see themselves living there because you walk in and they're actually very, very nice. And so that's something we're working on. So we're really excited about that project.
that sounds very interesting. Are the lots being sold at a discount nowadays or not?
Yeah, I mean, right now, I think at any given time, we've been watching it pretty closely the last year, and there's over 100 lots typically always for sale. I mean, there was over, I think, 4 or 5 thousand single family homes that burned. It was about 40% of the single family homes in the
Wow.
entire city. So there's a
Wow.
lot of homes. And the challenge is for a lot of people, if you're over the age of 50, the thought of building a house yourself is
Yep.
absolutely overwhelming. Not only do you lose your home, like, oh my gosh, what am I going to do? So most people have already moved, they already figured things out. So a lot of people, they've said at this point, 43% of people have submitted plans or have a plan to build, but that leaves,
Hmm.
close to 60% that are not. And so there's a lot of people that are just like, hey, let me get the insurance money, or they were underinsured. And so that's actually kind of what we like our option too, is that we want to build one. We have kind of two ways. We do want to get land and help to build and help, kind of have more, put more units and more opportunity for housing. But we also want to help people that have lost homes. We want to help people that
Mm.
are underinsured. A lot of people didn't have insurance, and the national average is 40% of homes are owned outright. So if you had a home and you owned outright, you didn't have a loan on it, maybe, and maybe you were underinsured, you had some equity there. You just want to get the equity out and you want to leave, or you want to actually be able to rebuild. Well, if the cost for stick building is, this is pretty commonly quoted, it's 450 to 650 a square foot, and that doesn't include, some things like permitting and other things like that, versus ours is less than $300 a square foot. So we can do it so much cheaper and so much faster. And so there's some people that would not be able to rebuild that we actually can really help
Hmm.
them to rebuild. And so
Hmm.
that's what we're most excited about.
Yeah, I think I sometimes suffer from the fact that, oh, I wouldn't want that. So, of course, nobody else would want that. Like, I don't rent storage myself,
Yeah.
yet I own storage, right? But other people they will want a cheaper home. And like you
Mm.
said, some people are older and they don't want to deal with the entire hassle with contractors and architects and permitting and everything else that is involved in building something, right? So for them, it's worth it to have a home for the rest of their lives
Yeah.
that is cheaper but looks and feels exactly like an actual home.
Yeah. I don't, and again, I think you look at them, I feel like they look like a modern home. I mean, in the Palisades, it might be like you may not put it in the Palisades just because of the cost of
Right.
just the homes around. But here, and we're not city of Los Angeles, especially county of Los Angeles, and they're very open to building new things. And so I think for a lot of people, when you build a house, normally you build called a stick built house, which is normally the way they build homes on site. There's typically a general contractor and around 22 subcontractors, right? You got the plumber, you got the person doing the floors, you
Hmm.
got the person doing the installation, you got the drywall, you got the taper, whatever. This basically, there's very few subcontractors. They literally build it. The person who is the general contractor usually does subcontracts the foundation, so they do the foundation work, and then basically you place the house, you hook the utilities up, and then you place the flooring in and you're done, right? They have to usually patch the drywall a little bit just from the moving it, but it's very simple. Like it's not like you have all these different people involved for a long period of time. And so I think that's why a lot of stuff can drag on because you're trying to coordinate so many things versus in a factory, the same guy who always does, the putting the water line in or doing the plumbing or doing the electrical, it's the same guy doing that every single time. And you literally see him just working down the line. And these guys push out something like 13 houses a week from the factory, right? They're just pushing them
Wow.
down the line, just keep, and you see it's really fun to see. So I think that for people, it really is a great solution. And I think we're planning to offer, hey, we can just sell people as a dealer, we can sell people the units themselves and then work with the general contractor. They can do that, or we can do the whole thing. We can say, well, we'll basically be an owner agent for you. We'll come along and kind of help you with some of this. You'll still be doing it, but we'll be doing kind of permitting and getting some of the work done for you. And just so that it's much more manageable for people.
So you'll be selling directly to the buyer in this case.
Yeah, yeah. So again, there's two routes we find. One is we'll just do this ourselves with investors, or we'll do it ourselves with land, whatever. The other thought is, yeah, with people that have homes that burn down that want to rebuild, we'll help them.
And then with the investors, are you going to keep the homes and rent it out? What are you going to do there?
It's kind of yet to be seen. I mean, ideally, if you can keep something, it is valuable. So if we're going to keep them, we'll probably build a little different. We would probably say,
Mm.
hey, we're going to do this as we'll have a 2,000 square foot house that internally will have maybe 300 square feet. That's a junior ADU that we can rent
Hmm.
out in the back. And then we'll have also maybe a detached ADU. So we'll get several units on each property. And that would probably make the most sense. And then you can do something called midterm rentals, which midterm rentals are like furnished rentals where you'll have, like nurses, other folks, and you can get sometimes 50 to 60% more in normal rents or even higher than that for people that are staying for, they're not long-term tenants,
Mm.
but they're staying for
Hmm.
8 weeks. They're kind of, maybe for 6 months or something like that.
Okay. Awesome.
Yeah.
What's something that you learned in the last year, maybe in real estate or in owning your own business that you think is important for people to also learn from your experience, not their own, maybe?
I think reinvention is really important. I think it's really important to be able and willing to learn and try new things. And I think that's true as a passive investor, as we mentioned, that sometimes it's great to be a certain type of investor, and other times it's great to do something different. And so, and also in our business, like we've continued to reinvent where it's like, okay, well, this multifamily worked well for us for a while. And then we were raising capital and doing deals. And then we just realized, like we're just not seeing the cash flow there. And also investors, a lot of them have lost appetite for doing a lot of
Yeah.
multifamily stuff, right? So we're doing different things. So we're doing things that actually we find exciting and that we feel like a lot of investors are there just wanting to try to find ways to make it work. So I think being willing to look at new things. I mean, ChatGPT is amazing too, right? Just to ideate, just to kind of come up with ideas. And so this is something for an individual. I mean, somebody said if you were to write down what the biggest goals are in your life, right?
Hmm.
Personally, your legacy with your kids, with your spiritual life, your health, and then you had somebody sitting right next to you that had a 1 in 10,000 person IQ, and they were helping you to solve these problems. That's what ChatGPT is. Now, it doesn't always get it right. It does hallucinate. You got to filter everything, whatever. But
Yeah.
in a way, like the ideation is huge. And so a lot of times we fail because in life at different things because we're not willing to keep coming up with new ideas and keep trying new things. And I think chat is really great to help with that.
That makes sense. That's a big one. So the
Yeah.
more you do, how often do you use it? Every day?
I use it every day. I used to, I kind of use it like I used to use Google all the time, but
Yeah.
now I just want to know anything. And I was, it's funny growing up, like my brother and I would argue. I have an older brother. We'd argue about something. Oh, what's right? And whatever. Oh, we'd both be super convinced we're right. And when we were young, it's like you had to like go and like find an encyclopedia or find somebody that knew that could really settle the dispute. Well,
Yeah.
now it's like you can just get on ChatGPT and it will just pretty definitively tell you whatever the answer is. And so it's really nice. And then even the
Yeah.
idea of like internet research, I used to spend time researching a certain thing. Well, now
Oh yeah.
what used to take you 20 minutes, it's like it takes you 5 seconds. You just go in and put it in there and it's like, oh, I got it. Here's what it is. So
Yeah.
I think that is really valuable. But it's just amazing. I think the people that really do well going forward are going to find ways to use it in their business, find ways to use it in their life. And I think the more fluent you are in it, the more
Yeah.
value it's going to give you. And I think it will change. The interface will change. It won't always be you're using your phone or you're using it, you're typing in, or maybe you're talking to it. There may be other ways. It might just be able to make connections in your life and point things out that you're doing. And that's just interesting. I don't know. We don't know what that's going to look like, but I think just being able
Hmm.
to continue to innovate in it is helpful.
Yeah, that's a big unknown that some people can potentially predict that are super involved in it, but it's going to be fascinating what will happen in the next 5 years.
Yeah, for sure.
Well, Bronson, is there anything else that you think is important for our audience to know?
Yeah, I mean, I think we talked about reinvention, just continuing to learn and grow. I think 2026 is going to be we're going to continue to have opportunities. There's going to be volatility. We've seen I'm a precious metals investor. I don't know if you talk about precious metals on here, but actually the event we met on years ago, that the real estate event we went to,
Hmm.
they were talking about buying metals, and I bought a bunch of physical silver and gold, and some of the stuff has done very well. So that's been one of my best investments over the years. Is just like I think gold has probably tripled at least, and then I think silver has gone
Great.
up even as it's come down recently, but it was probably at least 5, 6 times where it was. So it's been very good. So
That's
it's
fantastic.
amazing what you'll learn getting around people and doing things.
Hmm.
I actually have a free gift for your audience if it's okay to offer it.
Of
I have
course.
a my favorite cash flow investments of 2026. We talked about a couple of them here, but there's a couple I didn't mention. And if you text the word cash flow, just all one word cash flow to the number 33777. So you just text to the number 33777 seven. So it's 33777. You text the word inflation. I'm sorry, cash flow. I've got different ones. You text the word cash flow. That'll send you that guide. It'll ask for your email and let you know kind of what we're working on. But that's something I'd love to offer to your audience.
Yeah, absolutely. Thank you so much, Bronson. How can our listeners get in touch with you?
I think that's the best way. The free guide there. You can. We're on all the socials as well. But love to connect with anybody in regards to real estate investing, passively, actively, anything we do to help. We also have an investor community that does. We have like a meetup that you've been to as well, Stephanie, called the Wealth Forum. That's basically just nothing's pitched there except the group, and we just get in the room and try to help each other and try to figure out what's happening in the world and how we can make sense of it and make a good return on it. So
Bronson, thank you so much for coming over again. I really appreciate your time and your friendship.
thanks so much, Steph. Good to see you.